So transitioning, going to talk about the next panel here, Turbulent Times, how money, finance, and investment is being transformed by Bitcoin. That's going to be the next panel. Ready to introduce the participants here who are going to come out on stage. You guys ready? We're getting the thumbs up. All right, guys, next session coming on here, we're going to introduce Erik Bethel, private equity veteran and distinguished fellow at the Chamber of Digital Commerce. Welcome, Erik. Next, we've got Mr. Don Wilson, founder and CEO at DRW. Joel Kruger, strategy at the LMAX Exchange. And last but not least, your moderator, who I'll be turning it over to, Perianne Boring, president of the Chamber of Digital Commerce. Perianne.
Thanks so much, Pete. It's great to be here in Miami. In person, in the flesh, humans, face to face. So glad this day has finally come. We have an amazing group of experts here. We wanted to talk about why Bitcoin is important. Where does it fit into the conversation today? And from my perspective, in order to really understand the potential promise of this technology, you have to understand where it fits into the macroeconomic landscape. So we're going to get real nerdy, talk about monetary history, talk about how the economy, the international economy has evolved over the past several years, and then talk about where this fits into that. So where we are today, I think we're in a very pivotal moment in economic history. I think the history books are going to be written by us, and I think what the international financial and monetary landscape looks like today is being changed dramatically right now, and blockchain technology and Bitcoin and cryptocurrencies are going to play a key role in what the future of all this looks like. So just to kind of walk us through how the economy has evolved over the past several years, going back for centuries, hundreds of years back, civilizations have flocked to things of scarcity as money, predominantly gold and silver, but even things like wampum and shells and salt and other commodities. In 1941, the post-World War II, the world came together and created the Bretton Woods Agreement. And in that agreement, it said that the US dollar would be the world reserve currency, gold would be pegged at the price of $35 an ounce, and all other nations would peg their currencies to the US dollar. That lasted for about 1 minute. It completely broke down. 1971, you guys know this history. President Nixon severed the gold standard. By the 1980, all industrialized nations were using floating exchange rates, and that brings about the birth of, I think, what we call this fiat experiment. So turning it over, Erik, I'll start with you. Erik previously served at the World Bank. You guys looked at macroeconomic indicators. Where are we today? Has this been successful? Do you think the economy is healthy? How do we know that or not?
Wow, that's a lot to take on in a short soundbite. One of the things that you probably should have mentioned before Bretton Woods was we had close to 100 years of a gold standard. The UK, I think in the 1820s, was the first country to peg its currency to gold. The US, France, and others did it as well. And so the British did it at whatever, 4 pounds per ounce of gold, the US at $20 per ounce of gold, and you could sort of peg exchange rates to each other relatively easily. What broke down Bretton Woods was the same thing that broke down the original gold standard, which was governments do what they want to do, right? And that is print money. And so the presumption was, back when we had a proper gold standard for 100 years, that you had to have a certain amount of gold in reserves to back up your currency. But World War I upended all of that, and the European powers printed more money than they had. And to answer circuitously your question, where are we today? We're kind of in a similar position. I mean, looking at the United States, I don't know how you can rationalize $27 trillion in debt, a $6 trillion budget, and the list goes on. And it's not just the US, it's pretty much, it's everywhere.
So unsustainable levels of debt, The global debt to GDP ratio is over 300%, meaning we're spending more than 300% of what we're producing. How does, what's going to happen in the long run there? We have a huge gap in financial inclusion. Maybe Don, I'll just ask you, where does Bitcoin fit into this equation? Like, why is it important? Is it going to solve any of these issues? Is it going to fix any of this?
Well, so stepping back a little bit, just to touch on some of the earlier parts that you were talking about, Bretton Woods and why was it created? And I think that there was broad consensus at the time that one of the things that led to World War II was actually the hyperinflation in Germany. And so obviously, anything that the world could do to prevent a repeat of that was worth trying. And what Bretton Woods did was it attempted to really handcuff central banks and prevent them from printing too much money. Again, kind of tied everything to gold, which is a good way of solving that problem, but really removes a lot of flexibility for central banks. And right now, what we're seeing is, of course, that governments want more flexibility than that. Biden's proposal is to spend $6 trillion on infrastructure spending. And that's after trillions of dollars have been spent and handed out during the coronavirus pandemic. So does that mean that we're going to go into a period of dramatically higher inflation? It's certainly possible. And we went from, I would say, a very low probability of that happening to a much higher probability of that happening. And so any time that there's a higher probability of dramatic, purchasing power reduction of one's currency, people start thinking about, okay, well, what should I use as a store of value? And of course, historically, gold is what has been used. And I guess the question right now is Bitcoin a better version of gold? That's probably what we should be asking.
Yeah, absolutely. There's been many statements from a number of different officials at the Federal Reserve who have made that connection that Bitcoin is starting to take the role of gold, or looking more like a gold 2.0. In fact, Jerome Powell, earlier this year, he said that Bitcoin is more of a substitute for gold than the dollar. Since the Fed owns gold as reserves, would it make sense? I mean, what do you guys think that the Fed will start owning Bitcoin? And other central banks around the world.
So here, one of the things that I was looking at, as I was preparing for this discussion is, how much gold does the Fed own? And it turns out that the Fed owns at current values about $500 billion of gold. That's at $1,900 an ounce. And by the way, the Fed owns more gold than any other central bank. The next largest holder of gold is the German central bank, which owns about, 40% as much. And so, why do they own gold? Well, they own gold as a hedge against hyperinflation, as a tool that they can use if there were to be a dramatic reduction in purchasing power of their currency. Now, is $500 billion of gold really going to move the needle? When you're talking about, when the Fed owns trillions of dollars of treasuries, and if we do a $6 trillion infrastructure spending bill, then obviously the Fed's going to wind up purchasing a bunch of those treasuries. I mean, that's what happened last time. It's probably going to happen again. So I'm not sure that the $500 billion of gold is really going to do that much good, but it's going to do something. And so the question is, should you only own gold? As if you're running the central bank and you need to have some kind of hedge against very high inflation, should it only be gold? And one fact is that the amount of gold in the universe is very, very large. The amount of gold on Earth is a tiny fraction of the amount of gold in the universe. And so gold is only valuable because of its scarcity. Apparently there's a single asteroid, Psyche 16, that has more than 100 times as much gold as we have on Earth. So if you think that there's even a 10% probability that asteroid mining is viable in the next 20 years, then I would think if you're running a central bank that you should start thinking about other ways of owning scarce assets.
You make a great point. I don't know if any of you guys watch Barstool, but the Winklevoss twins tried to explain this exact same point to David Portnoy, and his mind just exploded. He's like, what? Asteroids raining gold? That makes Bitcoin relevant. That was very well said. In honor of it being Whale Day, wanted to also touch on institutional investors and how institutional investors are looking at Bitcoin. Because it is a non-correlated asset, there are advisors that are adding it to portfolios for diversification purposes. Joel, you guys deal with a lot of institutional investors. Dawn, you do as well. Some RIAs have come around to this, other fiduciaries less so. Why is that? Do you feel like the case has been made? If not, what is missing?
So I just want to go back to the gold.
Asteroids mining gold on Earth.
Well, not about asteroids, but as far as central banks considering Bitcoin, I think it's highly compelling. And if we look at the past several years and we look at central banks and alternative strategies, you've seen central banks and their balance sheets go towards equities, be more aggressive with the equity markets. And so when you're looking at an asset like Bitcoin, and you talk about intrinsic value and gold, and you compare gold to Bitcoin, and you look at the scarcity of Bitcoin relative to gold, and then you talk about intrinsic value, well, you could easily make the point that Bitcoin has a deeper intrinsic value than gold, which I don't know that it really has any intrinsic value. And it becomes more compelling when you look at a currency overlaid on a technology that does offer what I would argue to be some intrinsic value. So I think that that's compelling. As far as institutional adoption goes, I think that we're moving in the right direction. LMEX digital volumes have been just skyrocketing over the past several months. We're at 10 times what we were 12 months ago. We did 75 billion in volume, total notional volume, just this past month. And I think that it just comes down to, we need to understand that, when it comes to institutional investors, yes, decentralization is great, but at the same time, investors also want to have the comforts of a trusted institution right now, and we have liquidity and technology that are there, and I think that's what investors are looking for, to have that comfort that they're going to be allocating large sums of money.
Yeah, absolutely. The infrastructure has to be there. Very regulated, mature investors need strong, safe, regulatory clarity, and all the things that come with that. Okay, so we've talked about Bitcoin being a store of value. The Fed's talked about that. Central banks have talked about that. Institutional investors are recognizing that. Another piece of the macroeconomic dynamic and landscape that really plays into the adoption of this technology is what central banks are doing beyond maybe putting Bitcoin on their balance sheet, which would be the idea of central bank digital currencies and stablecoins and DeFi. So 3 kind of very interesting pieces that are all being developed by this community as well as the central bank. So if you have central banks issuing their own digital currencies, you have stable coins, which are really taking off in a very prolific and meaningful way, and then decentralized finance, which is really changing the dynamics of how people and individuals can engage in financial transactions globally with greater speed and efficiency and privacy considerations and things like that. How are these two worlds going to collide? Where do you guys see this going? If we meet here in 10 or even 20 years, how is this going to play out? What are central banks' roles going to be? Are we all just going to be operating in the metaverse on smart contracts? Where's it going?
Well, again, there's a lot there. Let me just tackle one at a time. The thing that a lot of people aren't talking about today, and it's probably one of the more important things, is that the Bank of International Settlements reckons that, say, 60 to 70% of all central banks are working on a digital version of their own fiat currency. Now, many of us in this room are, let's just say, skeptical of fiat currency for many of the reasons we alluded to. But central banks, what they're doing is that they're turning their bills and their coins into QR codes. That's happening as we speak. Now, imagine a world, though, and by the way, this is the Chinese are doing something with it that's taking it to yet another level. Many of you may or may not be familiar with the Chinese social credit score, but it's kind of like a regular credit score at a bank, but it also includes what did you buy at the store? Did you buy too much alcohol? Did you jaywalk? Did you, have you read?
Did you buy a religious book?
Did you buy a religious book? Did you attend a pro-democracy protest? All of these things factor into your social credit score, and to say it's an understatement to say it's Orwellian, right? Now, imagine now the People's Bank of China being able to track everyone's transactions 100% of the time, 24/7. And it could be very frightening. People could get canceled for doing anything that the government doesn't want. Now imagine a world where that technology is going to be exported throughout the world. So maybe this is a dystopian view of where things are headed. And here's where worlds potentially could collide. What if China, with their central bank digital currency, also known as the DCEP, what if they said Chinese digital renminbi DCEP transactions to Bitcoin won't be allowed, and they can stop it, right? And so, all of these things have to be interconnected, and authoritarian governments and dictatorial governments are going to want to control their people through their currency. And maybe this is where Bitcoin can provide, I don't know, freedom and liberty in this context.
Yeah, you talked about some of the concerns I think many of us share with China's dominance and investment in this space. I've looked pretty closely at what they're building with DCEP, and the ability to surveil is like nothing I think the world has ever seen before. So we're also having a lot of conversations at the chamber about, well, what should the U.S. be doing? What should the Fed be doing? What should the Fed be thinking about? There's a lot of different opinions on this. Don or Joel, do you want to kind of share what your perspective is on that?
Well, so I think that if the United States wants to ensure that the dollar is maintained as the reserve currency, it's essential that we move forward with some kind of a central bank digital currency. And of course, you can replicate what the Chinese are doing and use it to surveil your population and whatever. I certainly hope that we don't go in that direction. You can also, in a very thoughtful way, design it in such a way that privacy of your citizens is protected, but at the same time, that there's a mechanism where, the FBI or CIA can investigate terrorist activity under, the right structure. And so that's what we should be doing here is making sure that we design a digital dollar that's issued by the Fed in a very, very thoughtful way.
But we should have standards, right? I mean, we should say, as Americans, we should promote certain, let's call it principles, like a Magna Carta of sorts, where we say no government should be able to use currency to surveil citizens without a warrant, right? The Fourth Amendment prohibits unlawful search and seizure. No government should use a currency to force citizens to buy certain things or not buy certain things. So there need to be a series of principles that should be written. Maybe the Chamber of Digital Commerce can do it. No.
Playing devil's advocate on central banks and the Fed building and issuing their own digital dollar, there are some that would say do we really want to expand the Fed's role in the financial system? Don't they already play a large enough role? Why would we hand them over this infrastructure and make it public when we have things like stable coins that have multi-billions of dollars of volume already on them? Since they're stable coins, they've been built by the private sector.
Well,
Thoughts on that?
I mean, as far as the stablecoin issue goes, I would be shocked if the Fed would be willing to give up that power. They want to be able to control the money supply, so it would not be in the best interests of the Fed to have a stablecoin. As far as the issue of central bank digital currencies go relative to the topic of Bitcoin, I think this is getting a lot more attention than it probably needs to get. Sure, a central bank digital currency, the idea of getting payments out faster, stimulus checks out faster, cheaper bank accounts, that's all great. But we are looking at a centralized currency, single point of failure centralized currency that serves a completely different purpose. Now, again, in an economy like the United States, if you have options and checks and balances, sure, you can have such a currency that might be able to serve certain purposes, but you need to have other options. The prospect of a digital currency in China, I think, a lot scarier.
Yeah, I mean, I do think, right now, when the Treasury prints dollars and distributes them, at least in a positive interest rate environment, they're basically getting free float. And if you just let the private sector use, private tokens, then basically you're letting the private sector take over that role to take in the cash, deposit it in interest-bearing accounts, and issue these non-interest-bearing tokens. So I think that that the United States Treasury / Fed will want to maintain that ability to earn that interest-free, to make those interest-free loans.
Right, and then let's take this back to how we started this discussion. We got off the gold standard in World War I because the European powers printed more money than they had gold in reserves. If you take, you guys, some of you may hate me for saying this, but Tether is not backed one-to-one. I think that's kind of obvious, and they've even made those statements. So the presumption is for every Tether that's issued, there's got to be $1 in the bank, and it's a question mark. And so is the Fed going to outsource monetary theory, its monetary powers to Tether? I don't see it.
Yeah, certainly a lot to unpack there. I think the next several years are going to play out in an interesting way. In my opinion, I think there's a lot of different stakeholders whose roles and power and positions are going to change, and we're all witnessing that in real time here. Bringing it back to the institutional advisor, why we're here for Whale Day. Joel, what do you see? You kind of talked about some of the challenges of infrastructure, regulatory clarity. There's kind of two different philosophies right now, as I've talked to a number of investors, corporate and institutional, about their theories on what's going to happen right now in this current market. One is there's been three happenings: bull market correction, bull market correction, bull market correction. Are we going to see that again? Or are institutions going to front run and we won't see that correction? So can you give us any insights to your pipeline, your thoughts? What does institutional demand look like today?
Well, I mean, again, in institutional demand, I think 2021 has been an incredible year for Bitcoin and cryptocurrencies. Much like back in 2017, 2018, we had the initial kind of wave of adoption across the retail sector. I think 2021 has been an amazing year as far as institutional adoption, and we're seeing that, and we're seeing, structurally the solutions are there now for that to come on. As far as the trajectory of the price of Bitcoin and how that's going to change, I do think that we continue to see these ebbs and flows in the market that all markets will show. I don't think that will change. I think we'll continue to see corrections. I think the broad trajectory, if you believe in the economics of Bitcoin, is going to continue to be higher. We will see dips, but this year we're starting to see that institutional demand come in on the spot side especially, which is very important because it establishes that stability within the market. And so you're going to see corrections but higher lows throughout, and very optimistic about the outlook.
Don, as a prolific investor and trader in this space and in this room, I'm going to give you the last word. How do you value Bitcoin when you're looking at the day-to-day, you're looking at the markets? There's a lot of factors that play into how investors kind of try to determine where this is going. Where is it going? What type of predictions are you willing to share with us?
Yeah, so I don't make price predictions, Perianne. I will say, I sit in an interesting place. Cumberland is an important OTC liquidity provider in the space, and so we have a lot of context of kind of what's going on there. And we're just seeing a lot of important names coming in and a lot of major flows coming in. And so I think pretty broad recognition that this is likely to be a gold 2.0. And so then you can start thinking about, well, if it's gold 2.0, then how valuable is it relative to gold as a total market cap? And maybe should it trade, even be a premium? And that starts to give you a sense of kind of that's how I think about, in the long run, how to value it.
Absolutely. Erik, Don, Joel, thank you so much for your insights. Please help me thank all of our speakers today.